to buy Bitcoin right now, it seems like it's a no-brainer that this is a point where the risk reward equation has really shifted. It's the least risk I've seen in 3 years with the highest upside.
In recent years, the financial landscape has undergone a paradigm shift driven by the emergence of Bitcoin and the crypto ecosystem. Michael Saylor sheds light on this significant shift and its implications for investing, the crypto and stock market, and the global economy. The past year witnessed institutional adoption of Bitcoin, marking a maturation of the asset class and a surge in public interest. This move towards digital property is driven by the need for a hedge against rising inflation, a recurring phenomenon in history that erodes the value of traditional currencies. Saylor emphasizes the importance of recognizing Bitcoin as the dominant network, with its overwhelming support from smart, influential investors that gives it an edge over other cryptocurrencies. He doubles down that Bitcoin boasts an unmatched resilience and decentralization, and stands as an unstoppable force, resistant to any nation-state interference. As trust in institutions wanes, investors are turning to this new form of digital property. Saylor points out that even amid market turmoil, Bitcoin has outperformed most other asset classes, suggesting its resilience against economic turmoil. As the world grapples with inflation, shifting market dynamics, and diminishing trust in traditional institutions, Bitcoin emerges as a safe haven, reshaping the way we approach wealth preservation and investment. Let's get into the latest interview with Michael Saylor, as he discusses Bitcoin's role in 2023 and how it will revolutionize the entire crypto ecosystem. Also, we have just partnered with our friends over at Jamie Tree Finance, who have just launched a daily 5-minute crypto newsletter. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free. So to give out as much value to you as possible, we're sending out a 5-minute daily newsletter which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
I'm highly confident it'll get approved. I think the court system ruling in favor of grayscale, I think that's a big endorsement from the legal branch of government of the asset class. I think we already know that in Congress and Senate, there are lots of fans that support the asset class. And I think even in the CFTC and 2 SEC chairs have all said that this is a commodity, this is a legitimate asset class. So I think that we have a consensus that's building, and I think the pressure is now building. So I think the real question is just, will a spot ETF be approved in Q4, or will it be approved in Q1? If you had to handicap it, I would say, I agree. You kind of go with a 75% likelihood. There's a 25% likelihood that some other crazy thing happens in the future. We don't know, but it definitely seems you'll have multiple spot ETFs approved based upon the fact pattern we see in front of us right now. It's just important to note that the people with all the money are the hedge funds on Wall Street that are doing business with the wirehouses, and they're trading in equities in Apple and Google and Facebook and the ETF. So they're the ones that will actually move the needle. And even though we know the future, like we know, for example, that fair value accounting is coming, but it's not here yet. You've got to wait, some number of months. And we know that spot Bitcoin ETF is highly likely to be coming, but there's a big difference between knowing something is going to happen and being able to pick up the phone and call your broker and buy $50 million worth of it, right? So we're at that stage where we know it's coming, but we really haven't plugged Wall Street into the asset yet. What happens is once you've cured the structural deficiency, the discount will go away, and then there's no incentive to sell the Bitcoin. The people that are in the space wanted to own the Bitcoin. They didn't want to sell it. So I think there'll be a very, very quick short-term adjustment, maybe a jolt. Sometimes in the crypto markets, there's this panic that lasts for like an hour or sometimes for a day. And then people all go, oh, what did I do? That was stupid. Like when Jerome Powell starts talking, about interest rates, and then the price crashes, and then the price soars, and then it comes back in. So I think there might be a little bit of adjustment, but at the end of the day, curing the structural deficiency will cause the discount to go away. So that's what I think on that. With regard to the other spot ETFs, I think it's highly likely they all get approved at the same time. And if not at the same time, if not like in the same press release, in the same week. I don't think that you'll see Grayscale approved and all the other spots delayed. The SEC has enough tools at their disposal that they can manage the sequencing of all these things to either approve everything or delay everything or slow something down and speed something up. So I'm, as you could probably guess, I actually think the future is good for Bitcoin.
Michael Saylor believes that while some investors were initially uninterested in Bitcoin and gravitated toward other cryptocurrencies, the recent tumultuous events of the past year have caused a massive influx of investors to return to the dominant crypto asset. He highlights Bitcoin's position as the reliable, trusted network that stands the test of time when other assets fail to provide stability. Saylor believes in the long-term potential of Bitcoin as an investment, despite the current scrutiny of crypto by the SEC. He says those with crypto assets are likely to trade them for Bitcoin anyways, which is seen as the most trustworthy crypto asset and network.
There's never-ending number of people on Twitter that come up with scenarios for me figure out why you would, but they keep coming up with them, and it's always some crypto FUD, right? This exchange might melt down, that stable coin might melt down, maybe the regulators will do this, maybe GBTC will crash. But I don't think any of those things are anything more than maybe they scare you for an hour or a day. But if my holding time was a year, then I would just ignore all the noise. And of course, my holding time's more than a decade. So I think there's only three things that are relevant right now. Right? And here are the three things. The halving is coming with 100% certainty. And as far as I can see, most of the selling of Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills and pay their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that's coming. And then we know there's a spot Bitcoin ETF coming. And when that comes, we plug into Wall Street and the entire banking system. And then finally, we know that fair value accounting is coming. And when that happens, the objective will go away. And now you're going to introduce this as a conversation into hundreds of boardrooms. They will not move in a week. They move quarterly, but over the course of 12 quarters, you'll start to see company after company looking at this, and you'll start to see a reallocation of assets. Right? At the end of the day, corporations only hold two assets. They hold cash and they hold bonds. And so if Bitcoin is available as an asset, pari passu to a bond, then you'll see a reallocation from bonds to Bitcoin. And then in the institutional investor side, you've got all these people holding real estate, holding commodities, holding gold, holding ETFs and S&P indexes and the like. And if they start to reallocate, and they will, 1%, then 2%, then 5%, then you're going to have something that's never happened in the history of the world, which is you've got an ETF on a commodity that is scarce. Every other ETF in the world is on an asset that is not scarce. It's inflationary. You can make more buildings, you can make more real estate, you can make more gold, you can make more commodities, you can make $1 billion worth of any of those things. The underlying producers produce more of the asset to deflate or to depreciate the price. With Bitcoin, when $100 billion flows into the Bitcoin spot ETF, there won't be any ability for any producer to produce any more Bitcoin. And so you can't really compare it to the spot ETF of gold, because gold is an inflationary asset, and you can't compare it to ETFs on real estate or on bonds or on equity. This is the first time we ever plugged Wall Street into an asset that you cannot produce any more of. And so nobody knows what'll happen, except that if you reason from first principles, you know that it's got to actually perform better than all the other asset ETFs because the underlying fundamentals are just better.
The traditional investment landscape, as Saylor asserts, has been shaken by economic volatility and uncertainties. The conventional wisdom of relying on bonds, stocks, or property for wealth preservation has come under scrutiny due to unprecedented circumstances. As central banks drive interest rates lower, the effectiveness of the 60-40 investment model is questioned, prompting investors to seek alternatives. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Saylor asserts that this journey is just beginning. The impact of Bitcoin is expected to continue shaping investment strategies, challenging traditional norms, and fostering a new era of financial possibilities. What do you think about the latest interview with Michael Saylor? And what are your thoughts on his insights into the paradigm shift driven by Bitcoin's emergence and its impact on crypto investment strategies globally? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.